Hey guys, it's Bronson, and you might be intimidated by economics or might feel like, hey, it seems a little bit over my head. And the reason why it's important to pay attention to economics, because if in 2008 you were only focused on one asset class, whether that be stocks or real estate, you could have absolutely gotten destroyed because you weren't paying attention to more of the global economic structure of what was happening. And so we're going to jump into it, and the reason why this is important today as well is because 30 to 40% of all the currency in existence was created within the last 24 months. You can see on this chart here, M2, showing dramatic increase in the money supply. So things are dramatically changing. So this is going to be a crash course in economics. You're going to walk away with a better understanding of how economics work. And we're going to jump into it. We're going to go in 3 easy steps. I'm going to share a quote with you, and let's jump into it. All right, so first of all, let me give a disclaimer. I'm not your investment advisor. I'm not giving you any personal advice. This is only for educational purposes. I read this book recently by Harry Hazlitt called Economics in One Lesson. It was recommended to me by my friend Rick Rule, who's an amazing guy. If you don't know Rick's stuff, he's just really well known the last 40 plus years in the metal space. But this book, Economics in One Lesson, was written, I believe, in the 40s or 50s, an older book, but these principles are so true today, right? Truth is truth. Doesn't matter when it was written or who wrote it. It's just if it's true, it's true. So highly recommend this book. But really, the first thing that he says in this book is what effect does this cause? Meaning, when you're looking at an economic decision or a policy decision that a government's making, is looking at the long-term effect of any sort of policy, or even as an individual. What is the long-term effect of a decision that you make? And he shares many examples of this, but one is about rent control. And so rent control is really the desire to fix a short-term problem, saying, hey, rents are too high, let's try to stabilize this for people, try to really help do a service so that people don't lose their homes, especially people on a fixed income. And it makes sense. It's politically a common thing. Politicians will say, let's do rent control. But the challenge is that rent control typically over the long term has the exact opposite effect that it was intended for almost every time. There's been no time, this has not been the case, where it actually leads to less housing supply and substantially higher rent prices over time. Now, one example of this, they did a study in New York City years ago, and they found that there were over 30,000 people that were single people living in 3 or 4 bedroom apartments in New York City. Well, why is that, and why would these people do that? Well, they had been there for years, and they were living, with this artificially low rent because they were on rent control, and they couldn't afford to move. Now the 1 and 2 bedrooms were actually more expensive than 3 and 4 bedrooms. So you have just it created inefficiencies, right? If you have more space available, and yet people can't move out of a larger place because they would actually be paying more money in a cheaper place, you have just, it gets very inefficient. It also disincentivizes builders to build more because you're not able to raise rent if there's inflation, you're not able to do what you want to do with your property. So what happens over time, and this also came out that there were many buildings in New York City that actually fell into disrepair and just kind of were given to the city. Now we're seeing this in the city of Los Angeles. I live in the Los Angeles area, not in the city of Los Angeles, but Los Angeles has had an eviction moratorium since March of 2020, and it's extended until June of 2023. That's pretty crazy, right? And another study, they did a study to find out how many people actually had stopped paying rent, and it was 40 to 50% of renters in the city of LA have stopped paying rent. Unbelievable. It's just crazy. So if you are an owner, let's say you own a house or a small multifamily in the city of Los Angeles, and you have tenants that have stopped paying, you're just dying, right? Because they're not paying rent. You can't afford your payment. You can't afford to make it nicer. And now the city has said, we're going to come out with a rule that says as landlords, you have to register your place, and we're going to try to come against slumlords because we see some of these places are kind of getting run down. So again, the city is trying to solve these short-term problems, but they're actually creating much larger long-term problems. And you can do this is just rent control, but you could do this or kind of managing things different ways with rent control or eviction moratoriums, but these are just a couple problems, but you can look at it in any sort of decision that you make as an individual. What sort of long-term effect does this have? If I go to Starbucks every day and buy a $5 drink, what kind of long-term effects does that have on my finances, right? So you can see that, okay, that's going to cost me $150 a month if I go buy a Starbucks every day. You got to see the long-term effects. So we're going to just jump into this and why there's such a short-term focus when it comes to economic decisions. All right, so the second thing is that policymakers and politicians are concerned with short-term solutions. Now, why is this? Why are they only concerned with short-term solutions, even if the long-term effect is very negative, right? Well, the reason is because they want to get reelected, right? It's 2 to 4 years out. They can do things a certain way, pay everybody everything now, give free handouts, find ways to solve problems now, even if there are greater problems later. It really doesn't matter because this is just simply a window to try to get reelected. Now, do I think they're all egomaniacs? Probably no, but there are quite a few, right? That just really, it's all about just trying to stay in power. So these things that are actually meant to serve people in the short term, either they don't understand or they don't care that it has a very negative long-term effect. So we mentioned the idea of rent controls, which is a form of price control. So let's say right now, at least at the time of this video, recording, gas prices are very high. Where I live in California, between $6 and $7 a gallon, right? So if they just say, we're going to fix the price of gas, we're not going to let it go any higher. Well, what happens is that actually leads to gas shortages because companies will say, well, we're not going to do this and lose money, right? So they actually start delivering less of that particular good. This actually happened in the 1970s where Nixon, inflation was super high and he said, okay, we're going to fix the price of everything for 90 days. Well, there's a lot of problems with that, right? Because it's very difficult to enforce. What do you do if someone doesn't abide by that? If I have all these goods and I have to sell it at a certain price, why wouldn't I just wait past those 90 days and then resell them later? So it actually leads to less goods available. It just would penalize people that actually sell goods. That's why then you would go to the store and you wouldn't be able to find any food because nothing is available. Nothing is, there's no incentive to provide goods at what the market will allow. Another thing that happens in that, let's say there's some sort of price fixing scheme and I want to go buy a pen or I buy pens. Well, the quality can suffer. They can sell me pens that the quality is not as good as what it was before, and because the price has to be the same. So you see all the problems with the government trying to control a lot of this stuff and not really looking at the long-term effects. Another example of this is tariffs. So let's say for the steel industry, steel is much cheaper, and again, there's not much steel I know in the U.S. that's happening as far as steel manufacturing, but there were times where this was huge in the U.S. and a lot of it's moved overseas. But there was a lot of jobs that are going to be lost because they're saying, hey, there's thousands and thousands of jobs here and we've got to subsidize and support these guys, or we've got to put tariffs on different supplies of steel that are coming in. But really what that leads to is a higher cost for the consumer. You think if there were not tariffs there, then the consumers or the builders would be able to get the steel for cheaper, which would lead to lower cost for housing or lower cost for other products. So it really becomes that you end up subsidizing a certain industry, and is that really the right thing to do? Should you subsidize a company that's actually failing because it's being able to be done cheaper just to save the jobs and to save the company? My answer is I think no. But again, a lot of people look at the short-term results and they don't look at the long-term. The downside of this short-term view is that the consumer pays higher, they pay a higher amount of money. Now, I'm not the hugest fan of Walmart, but I do shop at Walmart. Their slogan is save money and live better. People think, oh, these large national global companies are making so much money. The average net profit margin for Walmart is actually 2.8%. So it's not that high, but what I get to do is I get to buy stuff for substantially cheaper than what I'd be able to buy it for if I bought it for a local place. So again, this is just stuff that when you look at the long-term consequences of policies, the long-term consequences of different decisions, it's very different sometimes than the short-term decisions. Now we're gonna get into pricing. I think this is the most interesting part of this whole video, so stick around and check it out. Okay, and the third thing I wanted to share is that prices are magical. Now I don't mean unicorn fairy or Disney movie magical, but I mean that they give us so much information. When a price is set for a certain good or service, it gives us a lot of information. It's really a vote that says, I'm gonna pay this amount for this product, and to be able to get that product, prices are what they are. So prices go up, they go down, they fluctuate, and it really creates an efficient way of moving resources around. One example of this is when the pandemic happened, there was a shortage of toilet paper, right? So there was no toilet paper. There were stories, I know a story of a guy who bought, some toilet paper. He couldn't find it at Costco, but there was a guy in the parking lot. It was like a drug deal. Hey, come on over here, I got something to show you out of the trunk. And he sold him a case of $50 a case toilet paper because he had it. He had it available. It was more inexpensive. The guy really needed toilet paper, so he had, it was better than the alternative, right? So he paid the money. So prices can go up when there's shortages of certain products in the short term, but over time, what happened, right? We look back on that and we think, well, there were companies that created more toilet paper and the price eventually came down. So that's kind of generally what will happen, is the prices will go up and down. Now, if you're a business and you're selling a product and you decide you just can't make any money selling this anymore, well, what are you going to do? You're going to stop selling that product, right? Because maybe there's too much competition, you can't make it cheap enough, other groups can make it cheaper, and you can find something else that you can create that you can actually make money doing. So that's kind of the magic of business, and kind of really how it works is to really look at the trade-offs, right? There are trade-offs in your own income. How much money you have is a fixed amount of money, a fixed amount of income. You can choose. Do you want to buy this? Do you want to go on this trip? Do you want to go there? Well, everything takes money, it takes resources. And there's a limited supply of a lot of things, right? Beachfront property, there's only so much beachfront property, and everybody wants to live at the beach, so it's going to cost a lot more. So if you want to live there, you're going to have to put more money toward buying something like that versus, if you live in a desert somewhere. Maybe that's not the best example, but again, it's basically a supply and demand, and that the market will adjust and will give us correct pricing based on how much it takes to create a certain product or service. So this is what's really interesting about free market capitalism, is when you look at kind of governments trying to set prices, and you look at this in the USSR where they were setting all the prices were wrong. People were starving, there were people starving to death, and it was really unfortunate, right? Because they were trying to kind of manage all this and set all the prices, but governments can never do that correctly, right? And so after the USSR fell, there were these Russian oligarchs, this is how a lot of them really started, is that they had the ability to buy stuff at this artificially low Russian price and sell them for 30 to 50 or 100x higher than what the price they paid for, and they were able to export it somewhere else. So maybe it was they were buying oil or they were buying coal or other products for really, really cheap and exporting it, selling it much higher somewhere else. And so again, the market will generally give us the correct pricing, but governments can't control it because nobody has that information to be as dynamic as what it is. If this shirt gets to be too expensive, I have a choice. I can go buy a lower quality shirt, or I can hold off purchasing, or I can pay, I can pay more money and get the shirt because I really want the shirt, right? So this is all the things that prices will really help us do. So conclusion of all of this is, again, there's a lot of things to touch on. I don't have time to touch on everything here, but really I encourage you to read this book. It's a great book. It's not a hard book. It's more true today, I think, than it's ever been. So check that out. Prices help us make wise choices. And really, free market capitalism has given us the greatest amount of wealth of any other type of governmental process or even economic process. And so be a supporter of that. I wanted to share this quote with you today. It comes from Harry Hazlitt, the author of the book. He says, "Today is already the tomorrow which the bad economist yesterday urged us to ignore." So again, everything has a long-term consequence, so pay attention to that. If you're interested in learning more about inflation and kind of how you should invest, or what are some ways to go there, check out this panel I did with a few good friends and really thought leaders, Jason Hartman, Russell Gray, and Brian London. Check that out up there. And then also I want to hear down below in the comments, who do you listen to when it comes to economics? I'd love to hear about that. If you're interested in learning more about what we do, we buy multifamily apartments kind of like this one, and basically we work with investors to do passive investing. You can find out some information about that down below in the description as well. So consider subscribing. We'll look forward to seeing you on the next video.